Hello everyone. Today we will be focusing on the two notes of the statement of financial position, which is note number 7 and note number 8, which are the ordinary share capital and the retained income. So firstly, we are going to do the ordinary share capital, which is note number 7. So what you are required to do, or what you must do when you are doing these notes, is firstly go to the adjustment that you are given to do the notes. So here I've copied these two adjustments which we need to do the ordinary share capital note. So firstly, here we are given the two amounts, the balance at the beginning of the ordinary share capital and also the balance at the end of the ordinary share capital. So you have to enter them in your notes. So you have to put everything that you are given from the adjustments before calculating anything. So it's 7,654. Here you'll be having shares issued as the beginning of the current financial year. So let's go to adjustment number C, which talks of the shares issued and bought back from the public. So bullet number 1, we have an authorized share capital of 2 million ordinary shares, meaning the business is allowed to sell 2 million shares to the public. So on 28th February 2019, 1,200,000 shares had been issued to the public, meaning these are the shares that were issued at the beginning of the current financial year. So 1,200,000 shares were issued at 4.2 million rands. So the next bullet says on 1 October 2019, 40,000 shares were repurchased at 410 cents, meaning they were bought back from the shareholders. So you must put them in brackets to indicate that they will be subtracted. So it's the shares repurchased. Then the next adjustment, on 29 February 2020, all shares that were unissued as at 28 February 2019 were issued. So the business had 2 million shares to issue to the public. So they have already sold the 1.2 million shares, meaning the shares that were unissued as at 28 February 2019 are 800,000 shares that were unissued, meaning these are the additional shares. Or the shares issued during the year. So right now on this side, which talks of the number of shares, we have all the amounts excluding the total. So you're going to say 1.2 million minus 40,000 rands plus 800,000 shares. Shares, sorry. So that leaves us with 1,960,000 shares that were issued at the beginning. So here you have to indicate these are the shares issued at the end of the current financial year. So right now we have two missing amounts. We are having two missing amounts. So the first amount that we are going to get is the amount of the repurchased shares. One might use this amount, which is 410 cents, and multiply it with the 40,000 shares that were repurchased. But we are not going to use this amount. Why? Because these amounts include the average price and the above average price. In the ordinary share, we only include the average price of the shares that were repurchased. So how are we going to get the average price? Here is the formula to get the average price. So it's the amount of shares before repurchased, which is 4.2 million, divided by the number of shares before repurchased, which is 1.2 million. That is going to leave us with 3 rands 50 cents, which is the same amount we are going to use for the repurchase shares, which is 3 rand 50 cents. So you are going to say 40,000 shares multiplied by 350 cents, which is going to leave you with 140,000, which is your repurchase price. So your next step now, or the only amount that is missing right now, is the amount of the additional shares. How are we going to get your amount of your additional shares? So right now you're having the balance at the beginning, the repurchase shares, and the balance at the end. So right now you have to reverse. You're going to say 7,644,000 plus 140,000, since we are reversing, plus 140,000 minus 4.2 million, which is the balance at the beginning. That leaves us with 3,584,000, which is the additional shares. Let me put that on bold to indicate that this is the amount, or the final amount, that we got after doing our notes. So this is your note, which is note number 7, the ordinary share capital. So now we are going to do note number 8, which is the retained income. Retained income. So the first thing you need to know is the structures of these notes. So let's go to our adjustments. So we are having adjustment A, B, C, G, H. I only took the adjustment that we are going to need. So in adjustment A, we are having the balances from the tried balance. So here, next to retained income, we have the missing amounts. We are not having the balance at the beginning. Also, we are not having the balance at the end. So as you can see in the notes, I've already put the question mark, indicating that these are the unknown amounts or balances. So what is next in the notes? It is the net profit after tax. How are we going to get the net profit after tax? Because in the balances there is nothing that talks of the net profit. So you go to your adjustment I. It says, after taking into account all relevant information, taxation for the year was accurately calculated to be 1,170,000 at 30%. So how this adjustment is going to help us? So 1,170,000 is the income tax, which is calculated to be 30% of the net profit before tax. So the net profit before tax is 100%. Then the income tax is 30%. So the net profit after tax is made by net profits before tax minus the income tax, meaning the net profit after tax is 70% at this point. So how are we going to calculate or get our net profit after tax? We are going to say 1,170,000, which is our income tax, then say times 70%, which is the percentage of our net profit after tax, over 30%, over 30, which is our income tax, That leaves us with 2,730,000. That is our net profit after tax. Then next, we are having the repurchased shares, the shares bought back from the shareholders. So let's go to our adjustments. So it says here 150 shares were repurchased on 1 December 2019 from a disgruntled shareholder for 532,500. So one might take this amount and put it in the note, but it is not the correct amount. This is the amount which includes the average price and also the above average price. So in the retained income, we put the above average price, not the average price. So right now we have to calculate the average price. So how are we going to get our average price? So here we are having the ordinary share capital. Okay, we are not going to need that yet. So here are the calculations for our average price. So here you are going to, firstly you need to get the average price of the repurchased shares. So we are going to take your balance at the end of the ordinary share capital, which is 3,500,000, divided by 1,250,000 shares. This is going to leave us with 280 cents, which is the price per share. So if you say 1,250,000 shares times 280 cents is going to give you 3.5 million rands. So next we are going to say we are going to take these 150,000 shares, which are the shares that were repurchased, then times 280 cents, which is the price per share. It's going to give you 420,000 shares, which is the average amount. So now we are having the average amount and the amount which includes the average amount and the above average amount. So we're going to say 532,500 minus 420,000, which leaves us with 112,500, which is the above average amount, the amount that we need, or the amount that we are supposed to put in the retained income note. So here we are going to have 112,500, which is our above average amount. Then next we are having the dividends. So how are we going to calculate our dividends? Go to our adjustments. Adjustment C talks of the dividends. Bullet number 1, interim dividends of 980,000 was paid, recorded on 31 July 2019. So they have already calculated the interim dividends for us. So let's just take this 980 and record it in our notes. So we're having 980,000, which is our interim dividend. Then as for the final dividend, since we are having the two dividends, it says here final dividend of 50 cents per share on 29 February. So since it is the final dividend, we have to, or we are required to take the shares that were issued at the end of the current financial year, multiply them with the cents that we are given here. But before doing so, you have to check the shares that were repurchased. It says here this transaction was recorded and the shareholders does qualify for the final dividend. Since these shares do qualify for the final dividend, we have to take these shares that were repurchased, add them with the shares that were issued at the end of the current financial year, then multiply them with the cents that we are given here. So these two shares gives us 1.4 million. Then we are going to multiply them with 50 cents, which leaves us with 700,000. Then our total is 1,680,000. Our total for the dividends, 1,680,000. Close bracket. Then right now, the only amounts that are missing is the balance at the beginning of the year and the balance at the end of the year. So one might ask him or herself, how are you going to get these two amounts? Because it is the balance at the end and the balance at the beginning. There is no calculating backwards or calculating forward. So how are you going to get your amounts? So if you go to your adjustments, your adjustment G says the following financial indicators, which are the ratios, were calculated on 29 February 2020. So the ratio that we need here is the net asset value, or NAV in short, is 457.6 cents. So remember, the formula for NAV is shareholders equity over number of shares times 100. So shareholders equity is made up of two amounts, which is the total of the ordinary share capital and the balance of the retained income. So if you go to adjustment A, which has the balances, we have the balance for the ordinary share capital, but we are not having the balance of the retained income. So we are going to use this sense in order to get our retained income. So here are my calculations. So X represent the shareholders equity because we are only having one amount in the shareholders equity. It's the shareholders equity over 1,250,000 shares, which are the shares that were issued at the end of the current financial year. So it's X over 1,250,000 shares times 100, equivalent to 457.6 cents, which we are given in the adjustments. Then your next step is to divide by hundreds on both sides. So if you divide by hundreds on your left hand side, you are left with X over 1,250,000 shares. On your right hand side, you are left with 572,000 over 125. Your next step now is to cross multiply. When cross multiplying is the denominator times the numerator. So here you are going to say X times 125, which leaves you with 125x, then 1,250,000 times 572, which leaves you with 750 million. So your next step now is to divide by 125 on both sides. Here you are left with X, then on this side you are left with 505,720,000, which is your shareholders equity, which include your balance for the retained income and your balance for the ordinary share capital. So now we are going to be able to get our balance for the retained income. So it's 5,720,000 minus the balance at the end for the ordinary share capital, which is 3.5 million that we are given here. Let me show you just quick here. This is the balance for the ordinary share capital at the end, and this leaves us with, let me calculate that for you quickly. We are left with 2,220,000, which is your balance at the end for the retained income. So now you are asking yourself, how am I going to get my balance at the beginning for the retained income. Now you have to reverse. When reversing, you have to start from the bottom then upwards. It's 2,220,000 minus the total for plus the total for the dividends, since we are reversing, plus 1,680,000 plus 112,500, then minus 2,730,000, which is our net profit. That leaves us with 1,282,500. Then that is your retained income, which is note number 8. So I think that's it for today, guys. Please like and subscribe our page. Thank you.